All right. Enough of Bank of America. Let's go and do one more article before we take a quick break. After the break, I'm going to talk about the FTC, the Federal Trade Commission going after rogue bloggers. And then one of those rogue bloggers that I think that they should go after, Martin Andelman from Mandelman Matters. We're going to talk about him right after the break. I want to talk about, there was an article today, a press release from HUD, and actually came out yesterday, about FHA. They took down 3 lenders, that were involved in some shady activities. Most of this has to do with FHA loans. Those 3 lenders were, the Strategic Mortgage Corporation. They go by Strategic, Pro Mortgage Inc., and AmeriCare Investment Group Inc., doing business as Premier Capital. And then they suspended a third FHA license, for Home Mortgage Inc. in Illinois. And here was the quote from FHA. FHA takes its oversight role very seriously and will move swiftly and decisively to protect borrowers from unscrupulous lenders, said FHA Commissioner David Stevens. Any lender who refuses to comply with FHA requirements will simply no longer enjoy the privilege of participating in FHA program. That's the only programs out there right now, basically, is FHA. So these bankers, who are approved with FHA and have their Eagles or their mini Eagles or whatever they call them, in the old days, a lot of them were really upstanding and doing the right thing. You know, they might have charged people, you know, an arm and a leg and points on the back and this and that. But a lot of the bankers weren't as slimy as the mortgage brokers, okay? That were on the street, you know, every corner, burning everybody for every dollar they had and charging max amount of points, you know, 20-year-old kids making $30,000 a loan. The bankers had a little more class. Just a little bit more class. Probably about that much. And what they did is they were working with FHA and all these different direct lenders through the crisis, not the crisis, but, you know, during the subprime days and so forth, they were making loans. And what happened is when the crisis started happening is they started fudging numbers and fudging their paperwork, in order to make their bills. Because a lot of these guys, you know, when the market took a crap, is they still had the same bills. You know, they still had the 750 Beamer. They had the wife that, you know, she needed fake boobs and stuff like that. And if she, you know, the banker didn't buy them for her, then she would leave him. Stuff like that. His home in Maui, he still had to pay for that stuff up here as the market went down. Okay? And these guys want to protect their credit, you know, their lifestyles, their 750 Beamers, their martini lunches. And in order to do so, when the market's going down, they got to start fudging things. Whoa, man, this loan's not going to go through unless we do this. Wow, this loan's not going to go through unless we do this or submit that. And a lot of the things they thought they were clever, but of course FHA and HUD knows that this is happening. Okay, that people, when they get, you know, behind the 8 ball and they get pressed, whether that be a banker, whether that be a person on Main Street or a blogger, they might do some unscrupulous things. So they know this is happening and they're watching out for it. And as soon as they see it, especially now since, you know, we're not rolling in the dough everywhere in America, they're going to cut them out quick. And that's what we're going to see. We're going to see a lot of bankers go down, as well as mortgage brokers, which I've already talked about on most every episode. They're going to probably be wiped out in 2010 if they're not already completely wiped out. Attorneys that are ripping off consumers on Main Street, whether that be for loan modification, they're going to get wiped out. The FTC, the AG, the bar is going to make examples of them. So they're going to do it hardcore so the others below them go, whoa, I don't want 3 hots and a cot. Actually, it's 2 hots and a cot and a sack lunch now, just so you know. And they're not going to do it no more. And then you got the bankers, the same thing. They're going to start going out in 2010, 2011. Out of business, okay? Especially when the Fed pulls out of the market, which I talked about before on previous shows. In March, the Fed's not going to buy none of these mortgages on Wall Street, the mortgage-backed securities. And I predict once this happens, it's going to pull the rug right out of the market. Shah! Just like that. No more mortgages, no more real estate, and all the clowns left are going to be wiped out except the big fish. They're the ones that are going to be left. Okay, and that's just the way the economy works, and that's the way the world works. So if you're a banker, you're a broker, or you're an attorney, be careful. Don't commit no crimes. Also, you might want to think of a new trade. possibly, learning some other skills to pay your bills. Maybe you want Mo to help you to teach you to blog. I don't know. All right. When we get back, we're going to talk about the FTC. Take a quick break, 2 minutes. And rogue bloggers, what they're doing to affect Main Street, exercising their First Amendment right, but abusing that right. All right. We'll be right back. Thank you.